Then let's try to understand why this money is important. For that, we first need to know about the demand for money. Why we demand money? Why people want to keep money in their pockets? This is called demand for money. There are three major reasons. Right? The first one is the transaction motive. As I previously mentioned, we need to buy some goods and services when we live in the society. So for that, we need money because it is the generally accepted means. So therefore, we want to keep some money with us for that person, for that reason, or for the transaction motive, to have the transactions. That in any day, if you take your pocket, there will be some money. And because you need to spend that for your lunch or buying books and pens and whatever. So therefore, we keep money with us for transaction purpose. And then we keep money for contingencies. In fact, if I need only 250 rupees per day, maybe for my lunch, then I keep some more money in my pocket. This is called precautionary motive. Precautionary motive means for any contingencies. Maybe suddenly you will get some illness, or someone will demand some money from you or request some money from you. So at that time, you should have some money. Therefore, we say people keep money in their hands for precautionary motive. These two are very much important in the present day. Transaction motive and precautionary motive, we keep money in our pocket. And also we keep money as an asset motive, as an asset. So if you want to store your wealth, you can keep your money as it is. You can buy, you can take some money and put inside the book and keep it there. In fact, in history, this asset motive was very much significant. But today, the asset motive is very, very, very minimal. People won't keep money as money, right? Because there's a loss. When you keep money, there will be some cost for that. So therefore, asset motive is not that much popular, but transaction motive and precautionary motive are still the reasons or the major reasons why people keep money. Then we need one concept called money creation before getting into the analysis of this inflation. So here we assume that M0 or the hard currencies or high-powered money, right? High-powered money, which is the coins and notes, it is the responsibility of the central bank, and the power is vested with the central bank. Right? If central bank wants, it can print any amount of money and put in the society. Then the same way, there is something else that generates money in the economy. So we call money creation. Of course, not money printing. When we say money printing, that is with the central bank. But when we say money creation, that is with the commercial banks. So we are having some banks called commercial banks. Later, I will come into the type of bank. So these commercial banks can create money. They cannot print money, but they can create money. Therefore, we say commercial banks can increase or decrease the money supply. If we go by M1, if it is M0, of course, it is only the central bank. But if we move into M1, the commercial banks also will be there because our demand deposits are kept with the commercial bank. So using the demand deposits, commercial banks can increase or decrease the money supply. Right? The ability of that is called the money creation. The rate of that is called the money multiplier. So money multiplier says amount by which the commercial bank increase the money supply. The money supply increase is not only because of money printing. It can be through the commercial bank. Of course, money printing can increase the money supply, commercial banks, money creation also can increase the money supply. So whenever we make the monetary policies, we need to worry about both of them. How the commercial banks get the increase the money supply? So let's assume government printed 100 rupee today or issued 100 rupee note. Right? So I will be taking that 100 rupee as my salary. And then I take that 100 and give that into the worker who works in my, so he takes that and then he put that in the bank. And so still in the market we have 100 rupees which came to me and then to my worker and then to the bank. When bank get that 100 rupee, it will keep some amount of money. Let's say 10 rupees in the bank, and the 90 rupee will be given back to the public as a loan. Someone will go and buy, take this 90 rupee as a loan. And that guy will pay with that money to someone else. So he take that money and put that again in the bank. 90 rupee will be deposited in the bank. So what government, the commercial bank does, it will take 9 rupees. And then the 81 rupee will be giving back to the public as a loan. So this 81 rupee will be taken by someone and then will be paying to someone else again. And that guy will take it and put that 81 rupee in the bank. Then bank will take another 10% of that and put out to the public. So the public will be putting back into the bank, and then bank will keep again 10% of that and give the remaining back to the public. Likewise, when you have 1,000 rupee or 100 rupee, that will be getting into the bank and bank will be giving that as a loan. Again, it will be coming back to the bank and bank will be giving as a loan. So when we do that, then the money supply will be increased with that amount. So now you can see the demand deposits. How much amount of the demand deposits we are keeping in the bank. So with that money, we have the money supply in the society. So this is called money creation. So the central commercial bank takes the money printed by the central bank and keep something in their pocket or the drawers and give the rest as the loan. So since banks are giving this as a loan, they are creating some money in the country. Why they keep some amount in their drawers? This is because some people will come and demand their saving. So I will make my saving, and then after some time I go back and ask some money from the bank. And also the second saver, he also will come and ask some money. So we usually know how much we need to keep in the bank. Usually it is 10%. It may be less than that or more than that, but usually the standard rate is 10%, which is known as reserve ratio. So reserve ratio, it is the coins and the notes retained in the commercial banks or in the central bank in accordance with the regulations of the central bank. The central bank will have certain regulations. Like before pandemic, it was like 10%. Commercial banks need to keep 10% of its savings as the reserve ratio. And the 90% can be given back as loan. But during the pandemic, it was reduced to 2%, 0.02. Right? So the reserve ratio got decreased to 2%. So then the ability of money creation of the bank was very much high. So this is the way that government tried to increase the aggregate demand. When government decreased the reserve ratio, banks can give more loans to the public. So the money creation will be high. So when there's a money creation is high, there will be a higher demand. So when there's a higher demand, of course, economy will be getting into the normal economic development path. So this is the expectation of the government, and this is why government decreased the reserve ratio. If you were in touch like just after opening the economy, after pandemic, government decreased the reserve ratio to 2%. So we can check that using very small work with algebra. So for that, I will start this one. Don't want to keep this by heart, but this one you need to keep by this one. The final. Let's start this one. C plus R equal to H. We learn. This is M1, that is C, cash with public, and cash with banking system. Sorry, this is forward money, the money demand. We say hyper money M0. This is M0. M0 equal to C plus R. C, it is the cash with the public. R, that is the cash with the banking system, including central bank. So we can say C plus R equal to high powered money, or 0. Then we can define this R. Right? Is the money with banking system. Why bank keep that money in the banking system? It is because of the reserve ratio. Otherwise, banks are very much happy to put whatever the money available in the public by mean of loan. But because of the reserve ratio, that cannot be done. So banks keep R, reserve ratio. This is small r stands for reserve ratio multiplied by the total amount of deposits. And so total number of deposits multiplied by the reserve ratio will be the R, and C will be the cash with the C. Cash with the public also can be denoted like the amount of cash that people want to keep with their pocket with the amount of the deposits we are. So we can multiply small c, which is the fraction of cash that would be held with the public multiplied by the demand deposits as the cash in the public. Using these two, we can redefine the C plus R like CD is C and RD, which is R equal to the high powered money. Then we can rearrange this equation simply, like taking this D out, then it will be C plus R, and then shift C plus R to the other side. Finally, we get D equal to is the demand deposit, C high powered money divided by C plus R. Then we have the money supply. Money supply is equal to C plus D. This cash with the public, whatever the money supplied by the bank, central bank plus the demand deposit. This is known as money supply. This is taken as given, but later I will come to that. Just remember, money supply can be denoted like C plus D. Then the C plus D we have done previously. C can be written as CD, like this. From here, we can say C equal to CD, and then D, which is equal to H divided by C plus R from this side. Right? Taking the previous definition, we can write M equal to small cd plus H divided by C plus R. Then again we can do a few more changes, like M equal to small c. Instead of D, we can put H divided by C plus R. So this is D times C plus, this one was here, H divided by C plus R. Right? So then we can take this H divided by C plus R out. The remaining will be C plus, here C, here 1. So we can write M equal to H divided by C plus R times C plus 1. Now, it's the same thing. We can rewrite, in fact, it is the same thing. M equal to C plus 1, this one, divided by this C plus R times. And if you use the first order derivatives of this money supply function with respect to H, will be getting something like this. C plus 1, C plus R. Simply what it says, if we increase high-powered money by a certain amount, let's say 1,000 rupees, right? When we change the high-powered money can be changed by the central bank. So central bank will change the amount of money. Like today, we are having, definitely today is the salary day for the government servant. So government will print a lot of money and put in the bank. So it is increase. Then the C plus 1 divided by C plus R will say what is the change in the total money supply. It is not only, let's say this is by 10 billion. It is not only by 10 billion. It will be much more than that. Because this part says the money multiplier. How much money commercial bank can generate. Right? So therefore, we say this as money multiplier. Simply it says if we increase money supply by 1 rupee, what is the total change in the money supply? So this tells us policy implication. One, by changing the hyper money, that is coins and notes, government can make the monetary policy. If it wants to increase the money supply, what it needs to do, it should increase the H, like what we are doing today. In fact, what we really need is the decrease in the money supply these days, because inflation is moving significantly up. So in that case, what government needs to do, government needs to decrease the money supply. Exactly what present government in Sri Lanka is doing, the opposite of that. There are reasons for that, but anyway, they are doing the opposite. So since we need decrease in high-powered money, what government does, it is having decrease in money. The second one, we can change the R. Just change the R, let's say C, that is the amount of money that the general public is keeping in their hand. Let's say it is 3%, 30%. 30% of the money that we get into our hand keep for our day-to-day expenditure. So C will be 0.3 and plus 1, then 0.3 plus R will be like, let's put standard rate, you can put 1%, 10%, 0.1. And you can put 10% and calculate the value. So you will be getting some value. If you divide 0.3 plus 1 divided by 0.3 plus 0.1 and look at the figure, and again you can calculate by changing R. Keep C the same. C will be 0.3 and R will be like today. Today the reserve ratio is now significantly increased. And it was 1% before the pandemic. During the pandemic, it was decreased to 0.01. Right? Now it is increased to 0.02 because government wants to control the money supply in the economy. So therefore, we can use this R to control the which can be used, R can be used. Now, what about present scenario in this country, we are having a problem. Government is not having enough money because we are having the problem of tax income. So we don't have tax income. Therefore, what government do? So government will print some money and put it in the bank. So it goes up. High-powered money goes up. So government needs to control the money supply. Therefore, what government does, it will be increase in the R, reserve ratio. It was 0.01, now it is 0.02. So reserve ratio is increased, thereby limit the money creation ability of the commercial banks. on one hand. On the other hand, not relevant to here, what government does, it will be buying the, it is selling the bonds. Government bonds are sold in the market. They are try to get some money which is with the public again back to the central bank. Thereby, central bank control the money supply. So central bank is printing money and putting in the economy, and on the other hand, using the bonds, central bank is taking back those money with the public. So this is called money multiplier. So simply, it is the ratio at which commercial banks can create money. The rate that commercial banks can create money is known as the money multiplier. So then this money multiplier happens with the commercial banks. We use certain words like commercial banks and the banking system and so on. Therefore, let's see what are the banks, right? What are the banking institutions? So the financial institutions under banking system. There are different types of banks like central bank, which I use up to now, and then commercial banks, again, which I use. And there are some other banks like specialized bank and cooperative banks and the finance companies. Let's have a brief idea about this. Like central bank. Central bank, it is well known now these days because of the economic crisis. Even the general public are having much understanding about the central bank. So central bank in Sri Lanka was established in 1950 with 4 major functions. So these were the 4 major functions when we established the central bank in 1950. The first task is the stabilization of domestic monetary values. That is having lesser inflation. So which we will be discussing after this title. So the central bank should keep the real value of the local monetary unit. If you take Sri Lankan rupee, we need stabilization of the Sri Lankan rupee. And central bank should maintain the stability of the Sri Lankan rupee with the international currencies like US dollars. So we should try to keep the stability. It is not going up and down every day. We need to keep some stability. If it is 202, keep it try to keep that under 202. This is also vested with the central bank originally, keeping the external value of the Sri Lankan rupee. So these two objectives will try to ensure the local and foreign value of the Sri Lankan rupee. The third one, to promote and maintain the high level of production, employment, and real income. So that is the level of welfare. So the central bank should try to keep the level of welfare of the public, right, by ensuring higher level of output of the economy. If we are not reaching into our potential output, then it is the duty of the central bank. Central bank should take the economy from actual to the potential output level. For that, the powers are vested with the central bank. So central bank can take whatever the necessary measures to take the economy back in the track. The final task is the encouragement and promotion of the full development of the productive resources of Sri Lanka. So we need the full employment and development of the productive assets in Sri Lanka. So with that, you can say the central bank is having a significant value in the economy because it should keep the local and foreign value of the Sri Lankan rupee. At the same time, it needs to maintain the stability of the economy with the potential for growth. and reaching our economy to taking our economy to the potential level. But anyway, we had a central bank modernization in 2000. So when we modernized the economy in 2000, we said there are two major functions of the central bank. The first task, the maintenance of economic and price stability. And it may be external, it may be internal. Whatever it is, economic stability should be with the central bank. And price stability should be with the central bank. It is like if it is high inflation, it is the duty of the central bank to curtail that and take back it to the normal. If the exchange rate is moving significantly up, then central bank need to get intervened and take the exchange rate back. So this is called price stability. And also we need the economic stability. And if unemployment is there and income is decreasing, economic growth is decreasing, then central bank should take the necessary measures to maintain our economic stability. So maintaining economic and price stability is a major task of the central bank. And then the second task is the maintaining the financial stability. Because financial sector is very much important in an economy. If a bank collapses, in fact, it was very closer before the present governor came into power. It was very closer to get into a bank failure or the crisis. Where bank gets into bankruptcy. If bank gets into bankruptcy, of course, the problems we are having today, which would have been very much different, and the problems are significantly high. Therefore, central bank is vested with the power to maintain the financial system. If any bank is or the financial institution is doing some wrong thing, government will get intervened or through the central bank. Central bank will monitor what is happening there and finally take the necessary action to keep on track. So you may have heard certain banks were closed by the central bank. Certain financial institutions were closed by the central bank. This is with the role of financial stability. So anyway, economic and price stability plus the financial system stability is the major role, are the major roles of the central bank at present. Central bank is known as the bank to the bank. And so central bank is the banker of the bankers. This is because if something goes wrong with the banks or the commercial banks can get into the central bank and get some loan. We public are not entitled to get into the central bank and get any loan. But commercial banks, they can get into the central bank and get some loan from the central bank. That is the final destination. This is why it is called bank to the bank. And that is the final destination for the financial institutions to get into the central bank and get the loan. If these banks are having some money, they can invest in the central bank. They can deposit that money in the central bank. So central bank will pay some interest to the commercial bank. Therefore, we call central bank is the banker to the bankers. At the same time, it is the banker to the government. So government is handling its monetary policies as well as gather required financial resources through the central bank. All the bonds are issued, or the treasury bills are issued by the central bank on behalf of the government. So therefore, we say central bank is a banker to the banker as well as it is the banker to the government. In Sri Lanka, the head office of the Central Bank of Sri Lanka is in Colombo. And we are having 6 other regional offices, Anuradhapura, Matara, Matale, Kilinochchi, Trincomalee, and Nuwara area. So there are 6 regional branches and the head office in Colombo. And this is headed by the governor of the central bank. And it's a big issue. We had a lot of discussions about the governors, but anyway, the governor is appointed by the president of the country, and he is running the whole system of the price stability and the financial sector stability with the help of the monetary. If you need more information, log in this cbsl.gov.lk. As a student who did economics, of course, you need to log into this time to time and see what are the updates. You will see about the inflation, exchange rate, interest rate, monetary policies, and some long-term visions about the country. These can be found in this website. So get into cbsl.lk for more details. Then we have the commercial banks. Central bank, general public will not have anything to do with the central bank. That is, the government and the commercial banks go and have their transactions with the central bank. So the general public will get into commercial banks to have their day-to-day financial activities. So in Sri Lanka, there are two government banks like People's Bank and Bank of Ceylon, and there are another 24, around 24 non-government banks or the private banks. So I'm not going to name them, but you can think. If you take even Badul, there will be 5-6 types of banks. These are called commercial banks. Why they are called commercial banks? Because they can take deposits. Importantly, they can borrow money from the public and they can give loan. Commercial banks can give loan. Financial institutions, they cannot. But commercial banks, they can borrow money from the public, called savings. These banks can go for savings and they can provide loans to the public. And they keep some valuables. Like if you want, what you can do, if you want to keep some of your valuable, let's say gold, you have a lot of amount of gold. So this is very much worth now, and you are worrying about the risk and you may lose. So then what you can do, you can get into a commercial bank and say, I need to keep this. So then you get a safe. And you get a safe on your name. So whatever the valuable, you can put it there and then you can keep the key with you and the manager will take one. So therefore, commercial banks will keep the valuables of the public and they will help in the international trade. Like if I want to import something from Japan, let's say I want to import a vehicle. If I call and tell the company in Japan, okay, please send me a vehicle, after sending me, I will send you the money. Will they agree? They will not be agreeing because we have not met each other. We had no any transactions previously. Therefore, they don't believe. Therefore, they will say, no, we are not going to send. Please put money in the bank. So then I'm asked to put the money in the bank. Will I do that? It's a lot of amount of money. So I will not be doing that because I'm worrying about the company in Japan. I'm not sure. If I pay money now, I'm not sure whether they will be sending it to me. Therefore, I also will say no. So then there will not be any international trading because both sides are afraid about both sides. So I'm worrying about the company is worrying about me. So therefore, transactions will not be there. In this case, commercial banks help us. So what commercial bank does, they will give us something called LC, letter of credit. So I will get to my bank and say, I need to import a car. So what I need to do for that? So then bank will open something called an LC, which says, let's say this is People's Bank. People's Bank guarantee that when I get the vehicle, they are ready to pay that money to the bank in Japan. Right? Using that LC, bank promise. I promise my bank if I get the vehicle, I will pay money to my bank. So the bank will promise it will pay to the bank in Japan. So the Japanese bank promise to the seller or the car owner, when the vehicle reach to Sri Lanka, we are going to pay you money. So therefore, don't worry. Don't worry, send the vehicle. If it reach to Sri Lanka, we will be paying you the money. Now, no issues at all. I am not worrying because I am paying to my bank only after getting my vehicle to this country. And the person who is selling the vehicle also not that much worried because he knows that he trusts his bank. So the bank guarantees if vehicle reach to Sri Lanka, bank will pay money to the seller. So he also happy. So this is the way how we do the international transactions, which is called LCs. These days there's a problem, like importing crude oil. Sri Lankan LCs are not now recognized by the international banks because we have default. We had not paid. We had not paid our borrowings. Therefore, the banks are worrying. If we open up the LC and send it, and later we will not be able to pay the value. So then the bank will be getting blacklisted. I think we had one time with the People's Bank with this Chinese case. They blacklisted. So then nobody will be accepting the LCs open up by the People's Bank. But anyway, commercial bank help us in the international trade. And also it help us with any other financial matters. When you are having some financial matters, you can get into the commercial bank and ask help from them. So they will be telling you about the entrepreneurship and accounting practices and so on. So these are known as major tasks of the commercial banks. So the important point with commercial bank is this one, giving loans. But it is only commercial banks can give loans to anyone. So not for specific purpose. If I'm having a personal reason, I can get into a commercial bank and say, I'm having a personal reason, please give me a loan. So the bank can give me a loan. So this is very important. In fact, keeping valuables, it is the duty of the commercial bank, as well as international trade can be done with the commercial banks. So commercial banks are very much important in the economy because of these reasons. Now, another special type of bank called a specialized bank. It's kind of a commercial bank or like a commercial bank, but they are established for special reason, like development banks. People can save money. They will not be getting into international trade, but people can save money there. So which says the bank can borrow money from the public and it can provide loans again to the customers. Right? If it is a development bank, maybe for the development purposes. If it is regional development bank, then for the regional development purposes. And if it is a housing development bank, then it is for the housing construction. Investment or saving bank, that is to encourage the investment. So these banks, investment and saving banks, can provide loans only for the investment. So these banks are established for specific reasons. So the development banks are specialized for development of the economy. Regional development banks for the regional development of the country. Housing development for the development of the housing. And investment and saving bank for the investment. So these are called specialized banks. And they cannot get in the international trade, and they cannot provide loans for any reason. It is only for the specific reason which is given to them. Then we are having financial companies. This is very common now in Sri Lanka. There are several financial companies like leasing. So the leasing companies which are established for the purpose of they can get money, they can have savings, they can borrow money from the public, of course, no worries. If you take any finance company, they can borrow public legally, and they cannot give loans. That is very important. They cannot give loans, they cannot provide loans to the public, but they can do the leasing. Leasing in the sense they will buy the vehicle. The finance company will buy the vehicle, and then vehicle is given to the customer for use. Then the customer will pay some money to the finance company as the usage fee. So then there are two cases. Right? On one case, the customer will have to give back the vehicle to the finance company after certain time, or it can continue until it pays that share to the bank, the finance company. After that, finance company will take the vehicle to their company. And some other way of doing is we have included some high premium there. Then your vehicle will be given for 5 years or 7 years, and the user should pay that money to the finance company. After 7 years, the vehicle will be owned by the user. Right? So these leasing facilities are provided with the finance companies. So in the banking system, we are having this central bank, commercial banks, specialized bank, and the financial companies. Only these entities are legally entitled for getting loans from the public. They can borrow money from the public. If you want to save any money, you can save your money in these banks, because we are having the government. We are having the government guarantee. So we are having the government guarantee for these savings. Then we have some financial institutions like cooperative banks or the cooperative societies. Of course, they are having the members. If you take like Corporate Bank, Sanasa Development Bank, Samurdhi Bank, these banks are having members. So members can either save money or put their membership fee in these banks or the financial institutions like corporate banks or the Sanasa Development Bank or Samurdhi Bank. And they can provide loans to their members. Not everyone. Not everyone. They can they can take borrowings from the members and they can give loans to the members. So these are called cooperative societies, not for profit. Their objective is not to get the profit, but for the cooperation among the members. And some other financial institutions which are called non-profit institutions like NGOs. We are having this Arthacharya Foundation, which is very much popular in this country, and Sevanatha Foundation and Future in Our Hands. These two are in Badulda. So this is also like cooperative banks. They can borrow money from cannot borrow money from the public. So it is totally depends on the membership fee. Or some donations, like international donors will provide money to these non-profit institutions, so NGOs, and NGOs will not be giving them as loans, but they will be giving them as grants or maybe revolving funds. Revolving funds mean we will be continuing with the fund which is donated by the foreign donor institutions or even the Sri Lankan government. So this is the structure of the banking system in Sri Lanka. Of course, we can discuss a lot, but this is just a rough introduction to the banking system in Sri Lanka.